In a sleek boardroom, tension crackles like static. The Saudi wealth fund's representatives, flanked by Jared Kushner, lean in as the ink dries on a monumental agreement. Electronic Arts, once an untouchable giant of gaming, stands on the brink of transformation. The stakes are colossal, the ambitions vast. What are the implications of the Saudi wealth fund's acquisition of EA Sports? In the early days of gaming, Trip Hawkins had a vision. It was 1982, and Hawkins founded Electronic Arts in a small office in San Mateo, California. His dream was simple yet revolutionary: to treat video games as an art form. As the years rolled on, EA Sports emerged as a titan in the gaming industry, captivating millions with its lifelike sports simulations. By the height of its success, EA Sports wasn't just a game developer, it was a cultural phenomenon. Titles like FIFA and Madden NFL became household names, selling millions of copies globally and dominating living rooms everywhere. The company's rise was meteoric, riding the wave of a booming video game market. At its peak, it was a beacon of innovation and creativity, employing thousands and shaping the entertainment of a generation. But amidst the triumphs and accolades, whispers of change began to circulate. The landscape was shifting, and EA Sports, despite its dominance, was not immune to the currents of transformation. Something was about to alter the course of its storied history forever. In the summer of 2026, the atmosphere at EA Sports was electric. European Commission had just given its nod to the Saudi wealth fund's bold acquisition. The deal, crafted with the help of Jared Kushner's Affinity partners, was a $55 billion gamble to reshape not just EA, but the gaming industry itself. Inside EA's Redwood City headquarters, the mood was cautiously optimistic. The leadership, with Andrew Wilson at the helm, was ready to embrace this new chapter. The promise of going private dangled the allure of creative freedom, a chance to break free from the relentless demands of shareholders and the Nasdaq's watchful eye. Yet whispers of potential layoffs and budget cuts loomed. The debt from the leveraged buyout hung like a shadow over the sprawling complex. Employees whispered in hallways about what might come next, anxious yet hopeful. The promise of more capital to reduce aggressive monetization strategies was a tantalizing prospect, but at what cost? The gaming industry was at a crossroads. The acquisition was a strategic move by Saudi Arabia to diversify its economy away from oil. With the backing of Saudi Vision 2030, the kingdom aimed to become a global entertainment powerhouse. The acquisition of EA Sports was a key piece of this ambitious puzzle. As the final regulatory approvals were announced on July 30, 2026, a new era for EA Sports was on the horizon. The company was poised to focus on its core titles, with artificial intelligence set to play a larger role in development. But as the dust settled, a new challenge was emerging, a challenge that would test the very foundations of this newly formed empire. In the midst of a tense May afternoon, the corridors of EA's Redwood City headquarters buzzed with murmurs. News had spread that several hundred employees would be laid off. It was a stark reminder of the stakes at play. The $55 billion leveraged buyout, backed by the Saudi wealth fund and Jared Kushner's Affinity partners, was a monumental gamble. And like any gamble, it came with its risks. As June approached, the anticipated closure of the deal loomed large. The promise of creative freedom enticed the leadership, but the realities of a $20 billion debt increase cast a long shadow. Employees speculated about what the future held. Would the influx of capital truly liberate EA from aggressive monetization? Or would it tighten the noose around innovation? The leadership, led by Andrew Wilson, faced a decisive decision: how to navigate the choppy waters of change without capsizing the very essence of EA Sports. The allure of focusing on core titles and integrating artificial intelligence into development was strong. Yet, the pressure to deliver on Saudi Arabia's vision of a diversified economy was immense. The stakes were not just high for EA Sports, but for the entire gaming industry. On June 30th, 2026, the original projected close date, tension hung in the air. The world watched as EA's common stock prepared to cease trading, marking the end of an era on the Nasdaq. The moment of no return had arrived. What lay ahead was uncertain, but one thing was clear. The decisions made now would reverberate across the gaming industry for years to come. The boardroom doors closed, and inside, the future of EA Sports was being rewritten. The boardroom was silent as the final signatures dried on the papers. The Saudi Wealth Fund, with Jared Kushner's Affinity partners, had completed the $55 billion acquisition of EA Sports. The ink was barely dry when the consequences began to unfold. EA's common stock was delisted from the Nasdaq, a stark signal of the company's new private status. The public investment fund now held a 9.9% stake, proof of Saudi Arabia's ambitious economic diversification strategy. Inside EA, the atmosphere was tense. The expected debt of $20 billion loomed large, and whispers of potential layoffs grew louder. The promise of creative freedom was overshadowed by the harsh reality of cost-cutting measures. Employees faced the unsettling truth that their futures were uncertain. Meanwhile, the gaming industry watched closely. EA's focus shifted to core titles, with artificial intelligence becoming a cornerstone of development. Yet, the market was unforgiving. Competitors seized the moment, capitalizing on EA's internal tumult. In the shadows, rivals plotted their moves, eager to claim the throne in the gaming world. Andrew Wilson, still at the helm, navigated these turbulent waters with a steady hand. But the pressure was relentless. The Saudi vision for a global entertainment powerhouse demanded results, and the clock was ticking. As the dust settled, one question lingered. Could EA Sports rise to the challenge, or would the weight of its new masters prove too great? The acquisition of EA Sports by the Saudi Wealth Fund and its partners was a seismic event, reshaping the gaming landscape. With a $55 billion price tag, the deal wasn't just about financial muscle, but strategic power. Saudi Arabia's push to diversify its economy away from oil and into entertainment was at the heart of this move. For EA, going private meant new possibilities but also new constraints. The promise of creative freedom clashed with the reality of looming debt and potential cost-cutting. The gaming industry itself stood at a crossroads, watching EA's every move. Would this be a catalyst for innovation, or a cautionary tale of ambition overreach? As EA Sports charted its new course, the industry's future hung in the balance. The ink dried, and the gaming world held its breath. EA Sports, now under the Saudi Wealth Fund's control, faced a new reality. The $55 billion deal was more than a transaction. It was a statement. Saudi Arabia's vision for an entertainment empire was in motion, poised to shift the industry's axis. Inside EA, the tension was palpable. Would the promise of innovation triumph over the shadows of debt and layoffs? As the dust settled, one thing was certain. The world would be watching EA's next move.